Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you again, chatting about markets. It feels like we've been doing this for at least 10 minutes already. That's how familiar this all is at this point in time. Let us talk about the disclaimer before we get started, and that says that the content of this presentation is just information, general information that has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. It's important to remember that trading, investing is risky. Markets go up, markets go down. They might not go the way you had hoped. You could lose money. Always remember it's you who's responsible for the stuff you do with your money and not me. The agenda for this evening is very straightforward. It is to simply answer your questions about markets. It could be just about markets in general. It could be about trading. It could be investing. It could be methodology, mindset, money management, or it could be about a stock, a commodity, a bond, an index, anything I can get a chart on, I'll give you analysis of. Just head to your Google Meet window, type it in, and I'll get to you in due course. But after I do the online requests, which are upcoming, and also after I do the whip around the grounds. And the whip around the grounds is not meant to start with Pilbara Minerals. It just happens to be a chart that was on the screen that I replied to somebody who follows me on Twitter, X, who said, all Pilbara is a buy, it's above the 50 and 200 period moving averages or whatever, right? And I said, hey, look, I don't use those moving averages. I don't know if they're valid or not because I don't use them and I haven't seen whether they're valid. I'm not saying they don't work, I'm just saying I don't use them. And I don't think it's having a very good time at my long-term downtrend ribbon. I think we are seeing supply manifest itself here. You can see the upward shadow and then a bunch of black candles coming out of there. But I do think it's supported between 304 and 302, and also the short-term uptrend ribbon. Outside of that, we do have high peaks and high troughs. The price action is not terrible, and there is a predominance of black candles, save for the last three. I think neutral at best on Pilbara Minerals. Now, that's obviously not a whip around the grounds, but it does give you an insight into the kind of stuff we're going to talk about today. If we do head over to our portfolio management model, let me just move a couple of these around here just to get our ribbons in the right spot. All pretty good, isn't it, for the Nasdaq? I'm pretty sure the last time we spoke about it, we said you might be 2/3 of risk, probably heading somewhere towards full risk position. If I didn't say that, I might have said half, heading towards 2/3. Anyway, I think we were of the agreement that we were increasing our risks, eventually on the way to a full risk position at this stage. I don't see why not. I think short-term trend is still very strong. Candles, I think, are still very good. Price action's okay, could be a little bit better. The last little trough is below a couple before it, not ideal, but holding the short-term uptrend ribbon is the most important thing for me, obviously, and the long-term trend ribbon is still perfection and doing its job really, really well. So pretty happy with that one. The other piece of the puzzle in terms of our portfolio management is the ASX 200. I'm going to go ditto. There's nothing so sinister there. It's a little bit of a hodgepodge at the moment, isn't it? When we look inside the sectors, obviously financials, we're seeing a pullback in the financials akin to what we saw when the carry trade partially unwound. And what's happened to cause this? Well, nothing really. China announced some stimulus, all right? And that means Australian banks have to go down. You know what? I'm sounding sarcastic, but I'm not really. When you think about it, well, China announced stimulus, and that means Aussie banks have to go down. Why, I hear you ask? What's it got to do with Aussie banks? It's got nothing to do with Aussie banks, apart from the fact that there was a lot of money in Aussie banks because it wasn't in the resources sector. And when China announced a stimulus, fund managers who have the same amount of dollars to invest say, well, okay, we need to buy some resources now because we're underweight that sector. Where have we got too much weighting, or which sector's done really well for us? We can lock in some profits, lock in some alpha, and therefore invest in some of these sectors and chase some more alpha. And therefore you get this situation where China announced some stimulus and Aussie banks had to go down. And that's why it's a little bit topsy-turvy at the moment. So some trends, some really great trends, and this is where it comes back and it impacts me and to you if you're following my methodology, some really great trends have taken a hit, unfortunately, because of something that was completely out of left field, news-related, and it's news related items that trend followers we cannot predict because we cannot tell the future. So this is just part and parcel of what happens in the markets. It is part and parcel of the oldest saying in the book, which is shit happens. And it's happened here, unfortunately. Just as frustrating for me, and we discussed this last week of how frustrated I am right now, because you get these V-shaped rallies, no base pattern, just very little indication that such a big move was coming. 20% moves, in some cases 25, 30% moves in supposedly big cap blue chip stocks that shouldn't be so mispriced in the market. And yeah, unfortunately, as a trend follower, if anything, you probably short these things and then you get tagged on both sides. Welcome to the party, boys. I think John McClane said one time on Christmas Eve, or a couple of times on Christmas Eve, depending on which Die Hard you saw. Let's head back to the Russell 2000, which is okay as well, isn't it? So I don't think there's anything so sinister there to push us off our thesis of, we're invested at the moment. We're trend followers. The markets are going well and we're invested. Could the top of the bull market occur tomorrow? Absolutely. And then we'd be in a different phase if shit happens, wouldn't we? But we can't see that, so we're going to stay the course at this point in time. Let's see if there are any red flags out there in the world. Look, I don't think that's a red flag on the French market. And when we say French market, we're really just looking at Europe in general. And there certainly isn't one there on the biggest market by capitalisation, Europe, and that's the German market. FTSE, well, there's no red flag there at all because there's no pulse. So that one's fine. And what are the Spanish doing? They have been going really well, haven't they? A little bit of a pullback there. I don't know why. But no red flags. Heading to Asia, obviously we haven't had trading since Monday. I think it was the last trading session. Although the Hang Seng might be, skipping to a slightly different beat. They did have a trading session today, and they were up again. So that's good because that's telling us where Chinese markets are skewing towards when they do rejoin us tomorrow. The Nikkei is fine, no red flags there. India, okay, well that's interesting. Not a red flag, but interesting to see that trend actually coming under some pressure. And then, as we said, these Chinese stocks, if I hover over that and you look over here, you can see they haven't traded since the 30th of September. They should be back trading tomorrow. Okay, and there's the craziness right there, news related. Against the trend is the trend follower's worst case scenario. Now, talking about trends that are changing, let's head over here and we're going to look at the London Metals Exchange complex now, and we can see some pretty good developing trends here in aluminium. Okay, so moving back to those May highs, which in themselves were sort of 2-year highs, and some short-term uptrend, long-term uptrends re-establishing itself. Great price action actually. Peaks, troughs relative to second from last peaks, etc., all looking pretty good. Copper, not bad at all. Not materially worse than aluminium, but maybe just not as close to those May highs as this one. But you could argue this one probably overshot in May, but still very much intact and looking good there. This is good news for us, trend followers that are trading some nice trends actually in copper stocks at the moment on the ASX. I will save iron ore for when we get to the trading view screen. Nickel's got a pulse. I mentioned that in a ChartWatch one of the evenings last week, but actually for the first time on that one, they're closing above the long-term trend ribbon, and that long-term trend ribbon was no longer dark pink. And that was the first time since, all the way sort of back here, but you could argue really back here because, obviously an uptrend. So that's impressive. Dutifully, it then went down, but that is still something to keep an eye on there. So if we say that even nickel is going up, then maybe this China stimulus is credible. Tin also trending higher again, and then zinc. Actually, I reckon probably the best looking base metal. Who produces zinc? You can tell me in your... in the Google Meet window there. We actually do have it being requested today. Craig's actually requested, as far as I know, the ASX's biggest zinc producer. Lithium carbonate futures have not traded, but worth having a quick look because I feel they're probably going to open higher tomorrow when they do. It'll be interesting to see where these open because this is starting to turn the corner as well. We do have, this inverted head and shoulders pattern, which really is a silly pattern in itself. All it's saying is, when you think about what an inverted head and shoulders is with a rising neckline, is just higher peaks and higher troughs, isn't it? I mean, duh. But if we call it head and shoulders, and it sounds really professional, but we are starting to see, this idea here that, we are seeing rising peaks and rising troughs, and falling peaks and rising troughs, turning into rising peaks and rising troughs, which then, under my model, turns this into a major point of demand. And, that's important. And it's the lowest point between a medium-term downtrend on the left and a medium-term uptrend on the right. Excuse me, so use the cough button. A close above 79.8, which is this level here, I'm going to say turns this trend for now. The short-term uptrend is confirmed as up, I think, already, and then we'll have to deal with the long-term trend. But it's going to start to look interesting. Nothing else going on in the rest of those. Let us head over to the trading view screen, and that's not it, but that's your request for today. So we'll find. And if you're following along before in the tutorial about TradingView, watch this. If you're watching this video, there was one, and you probably have the link in the email notification of how to find that. But that's why that is up there. And I'm just stalling because I'm trying to find the darn window, the darn Chrome window, which literally could be anywhere right now. It's not that one. That's you. No, that's not it. That's Amy Broker. We're going to have to employ the hack here, aren't we, ladies and gentlemen, where I do this and this. And it's coming. I'm no doubt. There it is there. That's where, the hack. You've got to use the hack. Okay. So we're heading over to here. And for those of you who obviously watching only the video, didn't tune in live, let's call it last night, that's the watch list that you'll get access to in the very near future. And you should also actually have access to my other custom lists. So Indices, bonds, and futures forex. We're going to go to futures forex, obviously, Carl, because we wanted to look at some of these commodities. We're going to kick off with silver here, which is just stuck in that overhead supply zone. It's doing exactly what the analysis suggests. If you're following along in ChartWatch and on Market Index, it's kind of textbook stuff, isn't it? Look, I think there's a very good chance it can get through. It's kind of hovering there. It wants to be there. It's not running away from it like last time. So I think that indicates that the demand side isn't as scared / a little bit more confident. The supply side isn't as in control as they were. They're not as scary, they're not as powerful. So that's interesting in itself. Obviously, next white candle high close, next high close, that's going to look very interesting. Let me zoom out a little bit, go to the weekly chart. Like, what does this silver breakout actually mean? What does it look like? Like, if I go back to the weekly chart, you can see, well, there's nothing above there. And let's go back to the monthly chart. I know some of it will look a bit skewy because of the markings. Look, we're going to have to go back to October 41.20, whatever that is, 41.60. Because back adjusting will change that value, and to put it in perspective, we're at 33.50. So that's a potentially big move if we break out in. You can see these two substantial peaks here from 2020 that couldn't get through. So that's why I continue to watch this. I say, okay, what's the point of looking at silver? You look at it quite a lot. I think that's pretty substantial. Now you might go, oh, geez, Carl says there might be a breakout. He didn't say there will be. There might be a breakout. Could go to $40. That's a big move. I better go and buy some silver stocks. Okay, that doesn't mean I think you should go buy silver. Silver stocks, you can actually go out and buy silver. There's a couple of ways you can do it. I ran in the ChartWatch scan lists, ETP MAG. So if we go here, ETP MAG. So that's the ETF, physical silver ETF. There are some silver stocks. I've got an article. Just Google Carl Kaplan with silver stocks, and there's a couple of articles on which ones to look at. Or you can just buy, if you've got a CFD account, you can just buy silver CFDs. That's probably the most effective way to do it, but I'll let you do your own research on which is the best way for you. Heading to gold now, and that looks fine. Everything's hunky-dory there. It's just biding its time, but still very much in trend. Heading to copper, we obviously looked at LME copper, but this is high-grade copper on COMEX in the US. Looks fine. There's clearly some supply here at 476.268. incredible how accurate that supply zone was with this manifestation here and that of excess supply, that upper shadow. And then we're seeing some other black candles coming in. Look, it's 50-50 for holding here and having another crack, or actually rolling back to the short-term uptrend ribbon. And let's see what happens from there. And that's coinciding nicely with 439.1. Heading over to iron ore, I actually wrote this up tonight, saying that, and you all know this already, but the prerequisites for a trend change in my book is when the trend ribbon, the relevant trend ribbon, goes from acting as dynamic supply to dynamic demand. That is a trend change from down to up, or from dynamic demand to dynamic supply, and there's a trend change from up to down. And we're seeing the first one here. So the price has rocketed, China stimulus, whatever it is, doesn't matter. It's taken it above the long-term trend ribbon, closed above it. The trend ribbon has changed colour. That's the other important aspect of it. And we've seen some hovering, some testing, some dinking. We know we need the dink. And the dink is all about how the supply side is responding to that rally, because in the past they have absolutely smashed every rally. How are they responding this time? Okay, well, they're not responding. There's something in that. How's the demand side responding? Because every time they got to the long-term ribbon, they got smashed by supply. They backed away. They said, okay, we can't handle this wall of supply. But this time they're staying put. They're firm. They're still buying. And I think that speaks volumes for the way the market is thinking, and certainly how supply and demand, or the balance between the two, has changed. So the fact that we're seeing that long-term trend ribbon now act as dynamic demand, I think if today's candle stays white, stays closing where it is or above, then that has confirmed a long-term trend change in iron ore. And that's as early as you can get, because the trend ribbons won't change for ages. And what I've done here is I've devised a way to identify trend change way before. Now, this is long-term trend change way before anybody else using moving averages ever will. And I think that's pretty neat. I'm getting goosebumps, but I'm thinking about it myself, because it took me bloody years to figure that stuff out. Let's keep going. We're going to go to uranium, which is yet to do that. Okay, it's still hovering beneath its long-term trend ribbon. That long-term trend ribbon is neutral. It's flat. But until it starts to act as dynamic demand, it's still a long-term downtrend as far as I'm concerned. The short-term trend is, let's call it up. It's neutral to up. Natural gas was an interesting one, because, we will often, and we're going to see this tonight, find aggressive setups where we all love to get a bargain, don't we? We love to get something that's been just down 80%, 90%, and it's rallied 10%, right? We want to take it all the way back up. But you'll hear me say, look, just be cautious about that long-term trend ribbon, which, ladies and gentlemen, doesn't exist. Don't forget that long-term trend ribbon. Only we know about it. Nobody else actually knows about it. In theory, it doesn't exist. It's just on our charts, but you can see just how effective it can be from time to time, and impeding that turnaround, that the end of the bear market. It just tends to perpetuate the bear market. And not only that, look on the way up, how it helps perpetuate the bull market. Then when you get beneath it, you test it, you fail it. Don't muck around with the long-term trend ribbon is the message there. We're going to head over to Brent Crude, which obviously there are some significant events in the Middle East. As tragic as they are, the net result for us as traders, and I don't want to sound flippant there or insensitive, is that white candles prices going up. And I've been doing some analysis for you on this and saying that as early as this candle here, something interesting was going on, and then really by this candle it was confirmed. And then really, if anything, today's candle with the touch, the little dink down to the long-term trend and high close, if it stays that way, that's still live, I think is an emphatic confirmation that we are seeing a trend change here. Now, where's that going to go? 85.50 to 87.50 is an obvious place. But beyond that, are we going to see $100 oil, $120 oil? That's stupid stuff. I don't predict, so I don't know. But I can tell you we've got excess supply in that zone. And the candles suggest to me we're probably going to get there. For completeness, let's do thermal coal. Actually popping up there. Sold me the dummy here because it actually did the little dink, and it never really held, though, did it? I mean, we watched it get above. We watched it start to dink, but never really gave us anything emphatic, and then obviously fell away again. But testing again and sort of holding up there Let's see if it dinks this time. That will be interesting to see thermal. I mean, you don't want to see it. It's not good for any of us who are using electricity that probably comes from coal to chat in these sessions. But it's a very real possibility, I think. Coke and coal has rallied in line with iron ore. Let us finish this whip around the grounds because I feel it's taking too long. Hopefully it's of some interest to you. Hopefully you haven't fallen asleep because I know it's late. I have to remember that now. It's late where you are, so I can't go off on any tangents in our whip around the grounds. Bonds have rallied. They had a huge rally on Friday night. We actually saw the US market completely factor out 25 basis points of cuts by the end of the year. That is significant. I know it's significant, so I can show you that chart there and that you can see it's significant yourself. But stocks rallied, and that's the important part. So that's the takeaway here. Dare I say, we got the Goldilocks rally. We got the Goldilocks scenario on Friday, which resulted in the Goldilocks rally. So you saw interest rates go up, but stocks go up. And that's telling you that the market likes the fact that the US economy isn't in the toilet. It likes the fact that earnings are strong and the Fed's still cutting rates. Like, you cannot get any better than that, ladies and gentlemen. Fed's cutting rates and the economy's still strong. Fed might not have to cut rates as much as previously expected, and that's what you're seeing here, but that's not such a bad thing. But don't forget, we had a wobble when we got down here in the markets. Let's keep moving. Let's get out of here. We're going to head over to your offline requests. I'm going to kick off with Colin. There's actually lots of people here tonight. I'm very surprised for all you night owls. Thank you so much for taking the time out to listen. Colin's got Domino's Pizza, and we're going to go here to find it. And where can we start? We can be there. Why not be there? DMP. Okay. Well, look, automatically when Colin sent me this email, I thought, well, surely that can't be a good chart. Surely I'm going to be chastising Colin for this one. But no, I'd actually not. This is starting to feel like an aggressive setup to me. The base pattern wasn't huge, and that's a little bit disappointing because that base pattern's important in getting rid of the dead wood. And that's what's toughest about those very quick rallies. Not to say that the quick rallies aren't good. They are good if you can quickly get above interact with the long-term trigger change. Okay, but I do prefer the longer-term ones because I can be more certain that we've got rid of the dead wood by the time we get there, especially if we get some volume confirmations in the mix. Okay, so I don't think we've had the big broad basing pattern here just yet. Okay, but that's not a deal breaker. Price action is still good. I mean, just go back to the basics. Price action's good. Candles predominantly demand side since September. The short-term trend ribbon has changed to green, and it's also supporting the price. This is all pretty good in the short term. Obviously, we've got the long-term trend ribbon, which we've already said we don't want to mess with. And that's really the only problem I have here. It's proximity to the long-term trend ribbon, and in terms of risk-reward, that might limit it somewhat. There's also going to be, in my opinion, a pretty decent latent supply zone. Look, I think it's through all of there. I mean, and I'm using sort of this peak here, that trough there, this big black candle here, that little trough there. When I'm drawing these boxes, I want to hit as many points of demand and as many points of supply as I can. Okay, in as small a zone as I can too. I don't want to go everywhere. Let me get rid of that. So I like everything here except for potential water risk. Now, for me, I'm going to pass. I reckon I'm going to find better setups than this. Okay. But Carl, Domino's it might go from 36. It might go, look, hey, yeah, maybe. I don't know, but really between you and me, do you really believe that? It might go from here. It might go to 42. I think I'm going to find stuff that will go up 10 or 12%, but in trends that I can feel more confident in, trends that are going to speak to me more. And that's all I'm saying here when I say, not for me, going to keep moving. Now, let's put me aside, okay? Forget about me. Who cares what I do? What do you do? Hey, if you like Domino's, if you've got some affinity with it, Colin, if you like what you see, and you're very valid in doing that, I've explained that to you, then you can add some risk. What's stopping you? Like, that's your worst case scenario. Add some risk. Now, you know my model. You know what my model would suggest or imply on this setup and how much risk to add. It wouldn't be saying go full risk position, all guns blazing at this stage, because of everything we've talked about. So certainly for me, if you're inclined, happy to get some risk on board. And then as it continues to build and continues to create nice candles and nice price action, good interactions with that long-term uptrend, keep on adding. And you might find that by the time Carl finally gets to a point where he's comfortable with his turnaround setup, so we're up here and we're dinking away in the trend ribbon, the trend ribbon's changed colour, you've already got a full risk position. Okay, well, holy dooly for you. I would say you took more risk to gain that advantage, and I've just taken a risk to get in a different point. Now, if it goes to $60, it doesn't really matter if I got in a little bit later, does it? I just did what I was comfortable with, and that's the message here. What I'm giving you here is a methodology, a tool. You know what? It's kind of a set of magic glasses on how to look at they're just black and white squiggles, and but hopefully tuning the magic glasses in to say, you know what? I can see that actually it's not such a crazy thing to add some risk here. And that's the totality of the equation. Like, that's it. Is it? Should I add risk? Should I not add risk? If I can get you to that point, I tell you what, I've done more for you than anybody else in the financial services sector. Let us go to Colin's next one. It's not just the adding the risk; it's the taking the risk out as well. Any idiot can tell you when to buy. It's when do I get out? So this one here is okay. Well, I'm glad this actually says FRP plus 1/3. I wonder if we saw it on that day. On that gap up, I don't know, you would have asked me about it and I would have said, okay, well, some good stuff happening there at that stage. I mean, I don't have a crystal ball, but, on that day, can't see any reason why you wouldn't hold it if you've got it. I don't know why I put plus 1/3, because that actually doesn't make sense on that day. It's not the right candle, unless maybe I did it on the next day. But even see, that's not the right candle. Unless I said something like if it closes above this point of supply. Honestly, ladies and gentlemen, I can't see why I said plus 1/3. I can't see it. Can you see it? I don't know. I'd have to go back and check the tapes. Anyway, I have no idea why I said 1/3. I'm not going to remove it, but the FRP makes sense. That's what I'm trying to go with this. On that day, I said FRP. Okay. Anyway, it turned out probably wasn't the right thing to do. Okay. That's all I'm trying to say. I can't see the future. And there has been really no reason to be part of it. I think certainly by this day, that's a pretty good indication that this point of supply is very much holding. This day is fine, and this day there's no reason to continue to hold past this day, right? So probably flat from there. I'm just giving you an idea of how the model works. Okay, nothing through here. It's starting to look interesting here. Let me get rid of that because I think it's confusing. I'll leave that there for posterity, no big deal. And I just want to say, well, where would we start to think this is interesting now? And can only do so much here. That day starting to look interesting, but I don't think I would have shortlisted it. That day, again, it's like dominoes. If you've got an affinity with it, certainly that's a day you could be adding risk. But is that going to be the best signal we have out of everything? I doubt it, and I probably would have found better things. But you can see on that candle that I pointed out, which is that one there, the likelihood of movement is up, not down. I didn't mean to go all the way forward, but anyway, it gets us to here, which is the big white candle. And the close above some pretty obvious points of supply here. Look at all these shadows. So that's interesting in itself. And that compels me more to want to own it, or at least to add risk on it. Test and hold of the short-term uptrend ribbon. Not huge volume today. I would have liked a bit more because we did interact with a big supply zone. So see the supply removal, although it could just indicate the supply's gone. Where is it though? Is it lurking up here? I could go for you, Colin, coincidentally. Let me copy paste that because I think that's where we are. Only today it makes more sense as to why it's 1/3. I might have, how I just go FRP 1/3 and didn't think about it. Might have just accidentally typed that in. But we won't know unless we go back and look at the video. Colin, for you, short-term uptrend, short-term trend ribbon is acting as dynamic demand. The price action is not terrible. It's not ideal. There's a little bit of you can see a little dink in here. Okay. But, that trough roughly holding that one. Look, it's 50-50. This candle is really everything that it's about here. And on the basis of that candle and the closing above that little supply area there, I could go plus 1/3 for you. Okay, is this going to be the best setup we're going to see tonight? I'm not sure, but certainly a valid FRP plus 1/3. Okay, let's go to Craig, who's got, I asked you earlier on who the biggest producer of zinc was on the ASX, and nobody has mentioned it. Okay, but as far as I know, it's this one here, which is South 32. We haven't covered this one for ages. The last time we covered it was, again, I don't know, maybe that day there was a plus 1/3. That one would make sense, plus 1/3 on that day. Okay, let's put that to bed and get rid of this just to look at it with fresh eyes. Okay, it wasn't a bad place to add a third, probably out completely by then. In fact, certainly out completely by then, and a small profit on that trade. What are we doing with it here? Okay, well, let's check the price action first. Well, trends are obvious, I should say, first, because short-term trend ribbon is up, it's green, it's acting as dynamic demand as best as we can see. The long-term trend ribbon has changed, and we have a dink here above it, so the criteria for trend short and long-term trend change are met. In terms of price action, once we've established that, let's go in here, and we've got a little downtrend at the moment. Okay, and that's really all that's probably holding us back there, Craig. So everything checks out. Prior to that, we'd like to see a couple of white candles, high close. The one we saw on MFG on that last stock would be ideal. I mean, that's the template for what we want to see here. So let me just show you what that looks like, something like that. So next high close, I think it's important that we close above that peak high there, at least. So that high is 375. So next high close above 375. I'm going to type it on for next time. Next high close greater than 3.75 is plus 1/3. In the meantime, I can't see any reason why you wouldn't be FRP if you had it. For whatever reason, you might have gone for, I can't see why you'd have it, but if you do, let's just say, okay. Now, I'm going to stand by that. I still think that's valid. Of course, the thought has just occurred to me for everybody else who the thought has already occurred to. There is a point of supply, and we've probably had an interaction. This is probably starting to interact with this lower part of it, okay? But that's okay too, because you very rarely get through it on the first go. So we're probably seeing the manifestation of some of that excess supply here, and we're holding up pretty well. And it will only really be until we get that next high candle that we can confirm that, yes, we've got that impetus now to get through. But if you're going to take this trade, if that's you, next NHC greater than 375 plus 1/3 FRP, if that's you, you are then saying, well, this is the best place for my money over all other setups. So in and of itself, I'm getting you to the point where we can find a plus 1/3, because you've asked me about it, Craig, but will this be the best setup on the day when that occurs? And we don't know until we get there. I doubt it. That's your offline request. Let's go to your online request. G'day, Carl. G'day, King. A couple, if you can, certainly can. BVS, which certainly made my shortlist today. So if we go here to the store twos, you can see my feature list here. This is not the broader list. These were the feature list, and BVS King is in my feature list for very good reason. It is the perfect chart. It is the epitome of excess demand. They very rarely get better than this. Big white candle there. Above average volume at the end. It looks small, but it is above average. You can see I'm running my 63 period simple moving average. Over the volume, price action is high peaks and high troughs. You know, this last little dink through here is certainly above that peak there. And, you know, today's close taking out the all-time high, if I'm not mistaken. I am mistaken. That major high there, that major peak, not an all-time peak. Pushing us into a broader rally, which probably will not be impeded until around there at $2, which makes sense to me. There's a bit of a minor one there, but I don't think that's going to worry me too much. Certainly that low on that candle kicks in around about 196. So, you know, we'd be probably taking some profit there around the round number anyway, but certainly plenty of room to go from there. So perfection, FRP plus 1/3, I think needs to be written on the screen. I don't know what's going to happen next. we could literally have seen the top of this forevermore, and we wouldn't know it tomorrow. Let's go to King's second one, which didn't make the shortlist, but certainly made the scan list. And if we go back here, we'll find it, and that's BLX, because it does have the very basics there for our criteria being short-term uptrend, long-term uptrend. The short-term uptrend ribbon is acting as dynamic demand, and it's doing a great job of it too. There's just too many black candles here for my liking. It's probably why it doesn't make it into the scan list as much as you might think, because of the basics are there. And this is where my eye comes into. I was about to say your eye. Hopefully your eye comes into it as well, where you go, you know what, Carl, the thing that strikes me the most about this chart is how many black candles there are. Even when it's going up, it's still somehow going down. You know, it's going up, maybe the market's going up at that time, so that, you know, stock opens higher, but then it, you know, somehow closes towards the end of the day, and that speaks to me of latent supply in the system, of programmed supply orders, of a battle between funds as to what the fair value is here. And I'd rather not be part of that battle. I'll leave them to it and try and find something like Bravura Solutions. So King, certainly your first one I think is brilliant. Your second one is good, but I'm not sure if it would get my risk. Having said that, today's candle is very, very strong, and if you've got, again, affinity with the stock or the story, whatever it is, you're not on the wrong side of the market if you're buying into this one. You're on the right side of the market, but we want a stronger right side of the market, if you know what I mean. I could go FRP there. I don't think I'm adding risk, honestly, on the basis of everything I've discussed and just the proximity to that point of supply. You know, close above 3, that's less of an issue though. Okay, but certainly FRP, not a +1/3 for me. Let's go to Robert, who's got MLX, and I'm going to go a little bit ditto. Not the worst chart. It's perfect TA setup. Look at that back there. A perfect turnaround setup, not technical analysis. Not that I can remember when we talked about this last, but perfect turnaround setup, and it actually is a perfect turnaround setup with that gap, that breakthrough the long-term downtrend ribbon. Look how well the long-term downtrend ribbon, you know, impeded upward price action. We finally get through. We actually print some half-decent gaps. We pull back, we test, we hold, and the gap of the run, the candle, the volume, and that actually is the perfect turnaround setup from there, isn't it? Where are we now? Is it the perfect turnaround setup? It's far from the perfect turnaround setup, I think. We're not seeing any interest here really in the volume, are we at all? The price action is mediocre, I'm going to say. So if we go sort of, when I'm struggling to see where the peaks and troughs are, that's usually not a good sign. And I can certainly say those are peaks and troughs there. And we can see that this last trough has really encroached on that second from the last peak. So not ideal. You know, the best price action certainly looks more like that, doesn't it? But still, short-term uptrend ribbon's holding, long-term trend is up, long-term uptrend ribbon is holding. Candles, maybe they're a bit more 50-50 than predominantly white. You know, I can see why you'd be FRP. Today's candle's fine. You know, certainly a solid demand side showing today, but not going to get my money on the basis that there's just too much stuff to contend with here that I'd rather not contend with. But like I say, Metals X, if you know the story. Hey, we talked about tin, didn't we? We said tin looks good. We said zinc looks better. But yeah, this is a tin stock here if you didn't know. All right, let's keep moving. We're going to go to Francine. Francine's got Sol, Washington, H Sol Pattinson. Going to go a little bit ditto for the ho-hum ones. It's straight away. Look, that's is that my default zoom? Let's just double check. You should always go back to your default zoom. And that doesn't really change things, does it? Because I think it still tells us a story that it's pretty much the same price. You know, it's been a 10% trading range for 18 months. And, you know, I don't think there's any desperation here to trade this one at this stage. Look, the good news is short-term trend is up. I'd say there's a predominance of white candles. Some of the other ones today haven't had that. I think this big, long, lower shadow here is very important. That's very attractive to me. It tested, it held the long-term uptrend ribbon. The short-term trend ribbon is up. The price action is better here, I think. But we still have, as I said, the ho-humness of that. Look, if it can close above that, I'm going to get a hell of a lot more interested. Not a little bit, a hell of a lot more interested, because we've got the prospect of a move towards 40. But even then, when you think about it, that's only 10% in and of itself, because the scale is kind of deceiving here, because we are, flat does flatten it out. I was hoping it would flatten it out more, going to a log scale, but it's not that exciting. I think that's my opinion. Certainly on the right side of half decent, Francine. Sands asking for Liontown. Ooh, I was kind of hoping we'd get these. I mean, I did put out a tweet today, and I said that as an aggressive setup, I could be adding some risk here, and I'm going to stand by that. Not the hugest base pattern. It's a bit like Domino's, but I think where it sort of has a slight advantage over Domino's, and it is very slight because it's 6 of one, half a dozen of the other, is we've got a slightly bigger distance before we hit the long-term downtrend ribbon. And if we look at what happened last time we got to the long-term downtrend ribbon, you can see it was brutal, right? It was absolutely perfect. X marks the spot. Do not collect go. Do not collect $200. Just go down. But I think this is, I think we can do it. I like the volume today, supply removal, interest, short covering, whatever you like. The short-term trend ribbon has acted as dynamic demand. Candles are good, price action's good, and I would go plus 1/3. And some people might think that this is like acid on my tongue, and it's not. I can assure you. Yes, I've been a major proponent of not being invested in these for years now. It feels like. But hey, I honestly couldn't care less. These are just cattle to me. I have no hang-ups about these. They're just cattle. They're always cattle. With a farmer, the beef farmer, he's putting the cows on the truck. He knows where they're going, right? There's a big Woolworths or Coles sign on the side of that truck. He's patting them on the bum. Okay, Betsy. Okay, Cindy. Okay, Daisy. On you get. Right? That's his job. Fatten those cows. Put them on the truck. Same with your job and your stocks. Fatten them up. Do your job. Put them on the truck. We don't have any emotional attachment to them. I tell you what the farmer isn't doing. The farmer's not going, oh, Daisy. Oh, Cindy. Oh, Betsy. Oh, I'm going to miss you so much. He's not doing that. FRP plus 1/3 Liontown are some of the other ones which we're starting to think are looking interesting here. We mentioned this last week, plus 1/6. That hasn't done much since. Of course, every other lithium stock has gone up, except for this one. It's actually still fine. I've got no opinions, no objections with that. Sayona, where's that at? I thought that looked half decent here also. Look, I'm going to go next high close even on that, and I think you can add some risk. This one does have a really good base pattern. I think the dead wood is out of here, and core lithium. So I think you can add a little risk there. If you're a sucker for punishment, maybe. What else can we do? I think Liontown probably looks the better of those three now. Somebody asked me about Pilbara. I talked about it at the start. I don't think that's ready yet. Mineral Resources. Look, the most impressive rally, and partially iron ore fueled. I could look at this in the near future, but it's still got to interact with that long-term uptrend ribbon. My mind is trying to comprehend how I can go from down here to here in such a short space of time. Other lithium stocks, LTM. I don't know. You could. I don't look. Technically, that's a big white candle if you account for the gap, but it's a takeover. It's extraordinary circumstances whether you buy that or not. Look, it is still a big white candle, so you could buy that one as well. You could put some risk in the game there and see how that one plays out. But again, it's a small amount of risk because it's an aggressive setup, in my opinion. I'm trying to think of lithium stocks here. RGL1, even some of these far out ones, and again, it's adding a sixth and seeing where you might go. You could ride this from 25 into 40. Okay, we're not in a million years imagining that this is going to go all the way back up, because it probably isn't. GLN was another one that kind of is looking a bit basey. White candle there, big volume. Look at that big volume. The dead wood is probably out of it by now. And I feel like I'm missing one, so let me go check my tweet offline, because I did put them in that list. And I bet you there would have been some lithium bulls that follow me on Twitter that literally spat coffee all over their computer screen when they saw me saying, actually, I could add some risk on some lithium stocks right now. GL1, GLN, Sayona, Core, PLL actually is the other one. So let's have a look at that one. And these are all aggressive. So there you go. So that actually looks quite interesting also. Plus 1/6 for me on that one too. So hopefully for you, San, that gives you a bit of a tour of Aussie lithium, relevant at the moment. Your next one is more my kind of stock. Certainly it's better trend overall, but it's also very sideways, I think. And yeah, I don't think there's any urgency is the right word I'm looking for here to go for this one. Certainly if you've got it, happy to hold it, but I think we need to see a little bit more interaction with this point of supply up here, but it's not far away, don't get me wrong. I think it's very, very close. Certainly an FRP if you've got it, and I could definitely take a look at FRP, but next high close, let's say sort of above, I think it's above 18, let's go 1830. Then I think you could start to add some risk, but I think you can be a little bit patient until it does that. Okay, Roscoe's got A4N, which I touched upon in the video before this one, and I said it did make today's shortlist. I like today's candle. I like the trend. I like the price action. FRP plus 130 if you've got it. If you don't have it, there is some supply up here which might concern you. But otherwise, you know, it's doing its thing quite well. Very little downside volatility, very little supply side response to these substantial pushes higher, which really puts it up there in my book. So happy with that one. Roscoe and MFG, I'm pretty sure we also did. It was the big white candle that got us interested on that one. If time allows, AFS, but that might be a US one, AFS, because I don't think I have it. So we might come back to that one. Let's go to Michael, who's got EOS, the space lasers, which got a little bit of a rally there on some of those events in the Middle East. Don't think we've got any desperate need to be in. Certainly it's trying to turn the corner. Certainly it looks like it's treating that long-term trend ribbon as dynamic demand. Again, you can see that from today's downward pointing shadow. Some supply did come into the market today, and the demand came in and soaked that up. Again, I'm going to leave it to you. If you had it full risk position, that goes without question. I'm not sure if I'm adding risk here just on the basis that I'm going to find setups more akin with what I like to see, and you know what I like to see. A little bit of supply probably coming in around that zone if and when it does get there. Not the worst chart we're going to see tonight, probably, but it's just not meeting enough criteria there for me. Michael, you really should tell me, Carl, this is the setup that we're looking at here, because otherwise, you know, I don't want to waste other people's time. You know, you can waste my time, but other people might just want to see the valid setup. So just consider that, everybody, when you're putting in your requests. I'll have a look at them all, but consider that. Sovereign metals did make my list, Michael. It made the 1/3 list, and I want to say I might have snuck it into, I didn't sneak it in to the feature list. But that looks very good to me. It certainly made it to the 1/3 list, no question at all. I love that last candle. The volume wasn't there, but this one doesn't print a lot of volume. I'm typing the code in. FRP plus 1/3, that's unquestionable for me. And yeah, I think you can have a crack at 80 here. Short-term uptrend, trends holding. A little bit of overlap to the price section, but it's not the most liquid stock. So I added a third there on the basis of that last bit full white candle. And it should put it in perspective when we get to the feature list here, starting at 360. I'm just going to whiz through these very quickly, why these ones made the feature cut. And you can see there just the perfect chart, as is that one there, Ansell FRPs, plus 1/3, a couple of those recently. The Better Shares Asia Technology ETF, their Tech Tigers, looking amazing. BRN as a turnaround play. So we've got a nice strong push, you know, covered that distance very quickly, very little downside volatility. The dink there at the long-term uptrend ribbon, very strong, powerful move today. And you can see the volume coming in. You can see the change in the guard here. Look, very speculative, but I think you can add some risk on that one. BVS we've talked about. Hub It's just, I mean, what do you do with Hub? You just want to own it and hold it. Hyperionics, if that's how you pronounce it. I don't know how you pronounce it. I don't care. I just think it's going up, and that's why I've been putting it in my list on a regular basis. This one came up today. I just thought it was quite interesting. The Small Ordinaries ETF. What does that tell you about what's happening in the market? I think that's interesting. Nickel Industries, I think, is a turnaround play. Certainly meeting the criteria. NWL, very obvious. NXL, geez, how many times have I put that in the list? Hopefully you're on that one and you're doing very well. Hopefully you're not out of that one, because I could just imagine probably a few people who tune in on Monday nights who made money on this, but every time I put it up, just kick themselves and go, oh, why did I get out so early? There was never a reason to do so. Carl told me not to get out, and if I don't see them, then I did it. And I felt good for about a second, and I felt awful since. A few people laughing there. Hopefully you're still on it. The trick is to stay on these as much as you can. FRP still on OPT, which I want to say, what's that line there? There's a bit of a point of supply there. Didn't seem to bother it today, so discount it. I think that's fine. Promedicus is just perennial. So is PNI. These have been in the list just constantly. Regis constantly in the list. SDR, Sandfire, looking good again. That's copper. Just again, another one that's constantly in the list. Constantly in the list. There are times we've just covered it in these webinars. Vulcan, a bit more of a specky one, but starting to look the goods. That's the other lithium one, isn't it? That I should have talked about. And Yancoal, also for somebody who clearly asked me about it last week, and not that I remembered this at all when I made this list, but what did I tell you? I said I needed the dink. I needed to see the price action at the long-term uptrend ribbon tell me that it's starting to act as dynamic demand. And then nice high close to follow through would get this in the list. That might be the dividend there. I don't know, correct me if I'm wrong. If it is, it's even better because it pushes all of this price action up. But that made the list today is, I think, a very strong turnaround play. So they are our feature charts for tomorrow. And the reason why we started talking about these is we were looking at SVM, which I said was good. Certainly hit the 1/3 list, but then didn't make that final feature list. And hopefully, if we go back to it, you kind of see, well, yeah, I can see why Carl would do that. I can see why he would say, yes, this, in isolation, in and of itself deserves a plus 1/3, but maybe some of those other ones are looking a bit better. EZZ was one that made the list yesterday, but didn't make it today for obvious reasons. And yesterday it was the perfect setup. And if you bought it this morning on the basis of yesterday's candle and you're cursing my name, I got that. That's fair enough. But all I would say to you is that, well, I put it in here as well, and probably put it in here and probably put it in a few other places. So you don't know what candle's coming next. All you could do is trade based upon what you can see. Full risk position here. There's absolutely nothing in this. In today's candle, there's not enough there to tell me to do anything but FRP. It is not sinister enough, and you know the drill on what gets us out of stuff. You'd need to see a lower peak. You'd need to see a close beneath, a trough that might be formed after that lower peak, and certainly beneath here, low closing candles, emphatic supply side signals to drag us out of risk. Stepwise, 1/3, another third, and finally the final third, but not yet, is my opinion on EZZ Michael. Going to Avant. Avant's got CU6, which I'm actually glad somebody brought this up. I really wanted to talk about this one tonight because we are here with the minus 1/3. So you can see maybe here last week we talked about it, and I said to you, let's just assume it was that candle there. There's nothing in the system, much like I just said to you about the last one. There was nothing in the system on that day which suggested anything but full risk position, and I probably drew a line under a trough, and I said, look, a full black candle, emphatic close, plus a candle beneath that trough, we take this off the table. Lower peaks, which is actually here as well, has formed a lower peak. So pretty much textbook exit setup here, or manage your risk setup. So 100%, I believe we're minus 1/3 as a minimum here. That candle's a little bit frightening for me. We've actually closed beneath the short-term uptrend ribbon as well. I'm going to go minus 2/3 here on that basis, but no more than that. I think I still want a third in the game. I'm still a third in the game. That's not plus 1/3 to add risk, and this is just that's if I put RP after that, then it might make myself go say 1/3. Let's just go not plus 1/3, 1/3 risk position. Maybe that's what I need to write. I just think that's where we're at in this one. We're still giving it the benefit of the doubt because of that amazing long-term uptrend and just the amazing pedigree it has. And right here is the exact reason why we take that sort of a view. And if you had, and actually it's actually almost identical. I think it's the same there, minus 2/3. That I think you would have been very valid in doing, and that would have meant you would have been not plus, but you would have been 1/3 RP. Okay, I know that's ancient history, but you can see here. I'm not sure why I drew those arrows, but whatever. That's why we keep that third. And then you're looking here is actually now we're FRP plus 1/3, right? We're adding our risk back into it. And in the meantime, you might say, okay, we should have just held on the whole time. Okay, maybe you do what you want to do, but in the meantime, I've taken that 2/3. I've probably done 2 other trades that probably were better than this, or maybe not. I don't know, but that's the goal there, obviously. So I think we're taking some off the table there, or you really should have up to this point advance. But hey, you do have to be careful what I say. That's what I would have done. Scratch what I said before. You do what you have to do. APX is in a similar boat here. Closed beneath that black candle low. I'm guessing is what I said, is ZRP. I might have even said less than ZRP. I don't know how you go less than ZRP, but that might be what I said, I'm guessing. It hasn't done it. I'm feeling now, I'm looking at that, and I reckon that warrants a -3 anyway. I'm not sure what I was on that day, because that big black candle I think deserves, or maybe I said it hadn't taken out this low yet. Maybe that's why I said wait for it to close beneath there. Anyway, I'm looking at it now. I think that's -1/3. This one here is very close to it. I think this candle here, and given where it's at, I reckon I'd knock another -3 here, just on the basis of this candle confirming this black one here. This black one's probably not enough in itself. It's not as big as this. It had a little bit of a lower shadow, but putting these shadows together, this candle and today's candle confirms it for me. We've got, I think, building supply in the system. That's a -1/3, and then I reckon your final 1/3's coming in on the close beneath that. So if you permit me to go copy paste, close beneath that one, I think is now your ZRP. How does that sound? Avant. Roscoe saying we can train our shortlist for comparison. Awesome learning. Good. I hope it will be. Justin saying +1/3 for Yancoal today. Justin, we've done that one. Absolutely yes for me. I think it's a very strong turnaround setup. BGA for you, Max. Actually, I should say don't put any new ones in. You all know why we're a little bit late today, but don't put any new ones in. Bega Cheese certainly made the broader list today, but as you saw, it didn't make the short list. Line Ball, it certainly could have gone in. I just felt the other ones had a bit more pizzazz to them, but no, this is unquestionable. FRP plus 1/3 here, so very happy with that. There's a little bit of supply here. The price action's a little bit flatter, but that is absolute nitpicking. And again, because I have to take a picture of those bloody charts, I have to upload them one by one into Market Index. There's an incentive for me to really limit that list to the ones that I think are just hunky-dory. And this one was 99 1/100ths of hunky-dory, but happy with that one for +1/3. For you, Max, and Jackie's going for WTC, which I haven't looked at for a little while. So that's interesting. When something is on the list every day, Jackie, and then I don't see it for a few days, it's conspicuous by its absence. And we can see why here, why it hasn't appeared in my scans, because of those 4 down trading days. Wasn't an emphatic bounce, was it, Jackie, off the short-term uptrend ribbon, which really should, be acting as an area of dynamic demand. The candles there to get there weren't great, but still holding, I don't want to sound too down on it. We're still definitely holding above, I think, an important point of supply there. The long-term uptrend ribbon should do its job. If it doesn't do its job, then we are going to take some steps on this one. What does that look like? Well, I think you might get a bit of a higher low tomorrow. It's going to create, somewhat of a high peak here. High trough. which could then lead into a lower peak. That's what I was meaning to say. So if we do see that lower peak come down, if there's a really bad candle there, that could be triggered to minus a third, and that's all we're talking about, Jackie. That's the total order of magnitude here. If that doesn't happen, then I think close less than is minus a third, again, order of magnitude. Now, if you start to get some of these triggers building up, so you get a big flare up here, and maybe it closes on the same candle, closes beneath that trough. Well, it's minus 2/3, or you get one there, then that's your second. If you get one here and then you get under here, well, that's not just a third, you've done 2/3. Okay, so just looking for signals to take yourself out of this one if need be, and hopefully need not be. Hopefully tomorrow's candle looks just like this one. Hold your breath, because it's going to look just like this one tomorrow. Let's assume the trend perpetuates itself, and bang, that's the one we get. Forget about all this lower peaks. We're not going to see that. That's what we're going to see, and then it's plus 1/3. Happy days. But we hope for the best and we plan for the worst, don't we, Jackie? That's why we're doing that analysis today. I think this one you're already out of, so I think zero risk position here because you've had many reasons to get out of this one, and because it's not doing the stuff we like to see, which is obviously bouncing off that long-term uptrend ribbon, making high peaks, high troughs, interacting, dinking at the short-term trend ribbon, and doing those sorts of things. There's no reason to add risk at this stage, but there were plenty of reasons to be out of it. You might say, hey, Carl, it's getting really close to the long-term uptrend ribbon, and I've noticed that every time it gets there, to be fair, it bounces, and maybe I'm seeing some value here. I don't disagree with that strategy. If you see something that works, you want to give it a go, that's fine with me, but at least wait for one emphatic demand-side candle after it's touched the long-term uptrend ribbon, please. Roscoe's probably reacting to a die-hard analogy. I thought that might get Roscoe going. Max has said, not a chart, but a question. If your ice cream sandwich is a big black candle, we're not talking about ice cream, you're making me hungry now, Max. We were talking about Japanese candlesticks. If your ice cream sandwich is a big black candle followed by a similar big white candle and a big black candle noting that it's bearish, do you have a term to describe the opposite, which I'd consider bullish? Okay, so Max is talking about if he's gone for ice cream sandwich, so I'll do the standard ice cream sandwich, right? So we need 3 boxes. Let me do it this way. This will be quicker if I do it this way. So let's do this. Apologies if we're going a bit later tonight, but if you're in session, we had that video before this one, so that's why we're a bit later. And Max is talking about this one. Okay, so that's your standard ice cream sandwich. You've got 3 candles. You can see what it's called. You've got the wafers of the ice cream sandwich and the ice cream in the middle. Look, it's one of those classic Japanese candlestick textbook patterns. I don't do Japanese candlestick textbook patterns because really go boil them down. There's really only 2 patterns that you need to know about. Okay, and 2 of them are on screen. So let me just move that for a second, because you've either got you've got total control. Okay, total control supply side. This one here. Okay, there's only 2 patterns. So I'm probably going to answer the question this way, Max, and say, look, let me counter your question by saying it's irrelevant. It's irrelevant. Just think of candles. Boil all your patterns down to this, and you can blend candles together, and they will become, trust me, you blend candles together, they will become either of these 2 patterns. So here's the first one, bullish and bearish, right? Supply side control. Okay, this one here is demand side control. Demand side control, okay? And the other pattern we're looking at here will probably look something like this and something like this. It's a variation, and the body is small, but it doesn't really matter. It's less about the body and it's more about the shadow. Okay, it's all about the shadow, and this is transition. All right, so we've got control, or we've got supply side. We've got, let's call it transition to supply side control. Okay, so we've got a control candle and a transition candle, and then we've got the opposite here. If we take that one now and do it quickly by copying and pasting, there's a smarter way to do it. We take that one and put that over here, the opposite of that one. And these are the only candlestick patterns you need to know. Please stop reading Japanese candlestick books, because you can only have a Japanese candlestick book that sells if you've got 250 patterns in it, because otherwise nobody's going to buy it. Okay, I couldn't possibly write a book on Japanese candlestick because it would be 2 pages long. That's page 1, that's page 2, and all other Japanese candlestick patterns boil down to either control or transition of control. When you think about it logically, there can really only be two things happening in the market. Either you're moving in the direction of it, or you're turning around and getting ready to move in the opposite direction. So I'm not going to answer your question, Max, because I don't think I need to. Or maybe I did. Let's go to a different Robert here. CAY doesn't ring a bell, but it should, because that looks awesome. The only reason why it hasn't come up on my scans, Robert, is because it's, I'm guessing, not meeting the liquidity filter. But that doesn't mean it's bad at all. It just means it's not meeting the liquidity filter. But that is the best chart I reckon I've seen today. So let me say for you, well done on finding it. And plus 1/3 for me, no questions asked. Thank you for bringing that to my attention. Let's go to Robert's second one, CVL. Oh, it's also not coming up on my list. And this is you're lucky, is that you don't have to use a liquidity filter, because you're a smaller trader. And not that I'm a bigger trader, but if I'm putting out a list for potentially hundreds of people, I prefer to be looking at more liquid stocks than less liquid stocks. But that is, you are 2 out of 2, hitting it out of the park here. Let's go to FOS. I'm curious now, can it be maintained? Look, it can. The only thing that's putting me off this candle is that tiny upper shadow, and I'm being really pedantic here. Let's go to the weekly chart. That is it. Again, you can see it's sketchy, so probably liquid. I'm going to go FRP on this one, but not the plus 1/3, just because I think you might get a little bit of a pullback. You might get a little dink and a better entry point on that one, Robert. But if you are already in it, then FRP. You don't care, you're quite happy. And the last one, let's see, you can go 444. And again, they're all quite illiquid, but yes, ditto on that one. Weekly chart checks out, happy with that one. And this one I don't think is got any impediments at all. So let's go FRP plus 1/3. 4 very interesting setups. Thank you very much. I didn't check. No dividend, Michael correctly saying no dividend for Yancoal this year. That was earnings. You're quite correct. And it was the declaration of no dividend that caused that gap, ironically. Don't type any more in, because I'm not going to do them, is what I meant to say. Let's go to Brett. Has got the Asia ETF, I think. Does the round number apply? No, it doesn't, Brett. And it doesn't apply generally for ETFs, because when you think about it, ETFs are made up of their constituent parts of what the individual stocks are all doing. And round numbers will matter on the individual stocks, but they'll all wash out when you add them all together. So no, round numbers are, I'm going to go so far as to say, completely irrelevant for ETFs. They can't make any sense. Wait a second, Carl. What about something like a gold ETF or a silver ETF, which is pretty much 1-to-1 with the price? So it's going to $30, representing 3,000 on gold, for example. Okay, well, that's going to have more relevance, but yes. So let's say for stock-based ETFs, baskets of stocks, no, the round numbers don't matter, but they might matter for commodity ones. But that is an excellent question. Let's go to your stock picks here, BC8, which I didn't see today because it didn't come up in the list because of today's candle. Is a little bit of a dodgy doji. There's one for you candlestick enthusiasts. Why are we seeing a little bit of a dodgy doji here? Well, there's a bit of a point of supply coming in here, so it's not surprising to see some people take that opportunity today and finally give themselves that pat on the back for how clever they were for holding on for nearly 2 years. Aren't they clever? Now, I'm not going to take a loss. I'm going to wait till it gets back to where I got in, and then I'm going to get out and say, what a clever little boy or girl am I. Not everybody's going to think like that, but some of them will. And the demand that is clearly coming in hits that supply, and we get equilibrium, and that's exactly the candle we saw today. And I'd say a lot of demand hit a lot of supply today, and that could just give it enough to cause to pause for some time while it works through this indecision. You know, do I want to be in? Do I not want to be in? So happy holder though. That is not a sinister candle by any stretch of the imagination. I'm guessing. Peter, no, Brett. Brett, I'm guessing you're on it, Brett. I'm guessing you're not asking to get into it. I'm guessing you've been on it for a while. It's been in my list several times, and I hope that's the case. And I hope you're making lots of money, and I hope you're very happy with that. FRP not adding a third at this stage. You know what to look for, Brett, in terms of the bad stuff that could occur to cause us to manage our risk. Let's go to CAT. I expect we're going to see something very similar. No. Well, look, it's similar. There's nothing to do here. FRP, no questions asked. It's not similar in terms of there's no, big indecision candle there, but very, very sound, a very sound uptrend at this stage, both in the short term and long term. We do see some momentum coming out because yes, there are some very moderate, overlapping peaks and troughs. It's very gradual, very little downside volatility, I think is the message here. So I'm happy with it. Look, if it starts to close, I'd almost go really wait for the long-term trend ribbon. I know you've got a little trough here, but let's just give it a little bit more leeway. And if you wanted to do 2/3 there, you could, but certainly I'd go 1/3 at this stage. If you saw a big black candle before that, you might want to act earlier, but no, it's FRP. Let me just simply copy and paste what we wrote last time, and the time before that, and the time before that. Okay, I'm starting to wane here. I reckon you are probably too. I've done BVS, Peter, XAM I haven't done, and I was ringing a bell. Yeah, look, I think that looks pretty good. Xanadu Mines. It's a little bit flat, but I don't mind it. I think, it's a turnaround play. It's meeting all my criteria. There's going to be a little bit of supply sort of kicking in around here, but hey, I think there's plenty of room until we get there. I'm FRP if you've got it. I'm plus 1/3 if you don't. The only thing I would say, question is whether this is the best setup you're going to find today. I think it's a strong turnaround setup. How does it compare to all the others? I'll let you decide, but you've got my vote of approval on that one, Peter. And we'll do your US stock in a second. Matthew's got US stocks there, which we'll do again in a second. Nicola's got SDR for us, which we did cover. And just to reiterate, I'll speak a little bit more about it. It's perfect, Nicola. It doesn't get any more perfect than that. For me, this is such an emphatic demand side push. And what did the supply side had to say for it? What you're looking at here is a company that people just don't want to sell. And they certainly don't think it's expensive at $6.20, do they? Because look how many people thought, I better get out now. It's just, they just want to own it. They just want to hold it. And they're still buying it. That's definitely an FRP plus 1/3 proposition for me. Put the one in there. There we go. Thank you, Nicola. And the dink is in. You're correct. Perry's got some US ones we'll do in a second. AFS is away from the screen, Roscoe. Don't tell me that, mate. Don't give me 3-letter acronyms, buddy, because I'm going to think it's a stock code, okay? Obviously. Perry's got WC8. Okay, good. I didn't look, we talked about the lithium stocks today. This one didn't make it in because of that upper shadow. And yeah, a little bit of supply side volatility as well, Perry, I think, before that, just putting me off a bit. But look, not the worst one. I just don't think it's the best one for the turnaround. I'm actually curious about this one. We didn't talk about this one today. Look, not that bad. I could put it in there with a few of the others, but it's not as compelling for me just yet. Maybe some of those other beaten down ones. But yeah, look, I think we're starting to split hairs now, aren't we, if we're getting into that end of the market, because it's not really what I like to do anyway. We've talked about all the other ones I do like to do. WRK, which is another one of those illiquid ones, but wonderful ones. I don't think the last candle warrants us adding a third on today's basis, but certainly FRP, no complaints on that one if you've got it. I am trying to get through this one. Michael's given us YAL has no dividend. Let us head over to the Chrome screen. And for whatever reason, we are looking at Twitter at the moment. We're not going to stay there. We're going to head over here and we're going to do the US stocks, heading back up the list actually with, first we'll do IBKR, which is one of Perry's, but it's also an offline request from Jason. No surprise, those two mines, brilliant mines, the beautiful mines of Russell Crowe, beautiful mines are thinking alike there. Of course, both, we all know what happened to Russell Crowe's character, W. Perry, and Jason, he went completely bonkers. I'm sure that's not going to happen to you guys because you're looking at stocks too much and sending yourself crazy. But this one looks fantastic, and I can't fault it. And I'm sure when I zoom out, yeah, we're going to see it's even better. And therefore, we are going to, for our beautiful mines, there, we're going to copy paste on that one, FRP plus 1/3. Let's see how Perry goes on his second one, the LDOS. Jason didn't have that one, so that's interesting. Good, great. It just doesn't have that sort of excitement on that last candle that I'm accustomed to seeing on your ones. But it's certainly, it's a slower burn, but it is, again, the perfect looking chart here. No qualms about it, and actually, there's a beautiful weekly chart there, and we're going to be spoiled for choice, aren't we, on many of these US ones. If I get back to the right periodicity, and I'll be able to type in what I'm going to do here, which is plus 1/3 on that one, and we click save. We'll get to Perry's third one, which is CPay and or Core Pay. More accurately, see, that's got that little bit of excitement there in that last candle, that upside volatility. Let's go check the weekly chart, and we are actually taking out that high. I don't care what's happened before that because it's ancient history, but very, very satisfied with that. And everything else checks out really nicely. And I like the fact, actually, you've got two really clear supply side signals, and we're closing above that. Good volume push to remove that supply in the system. Little test here. It's really setting up nicely. So let's go FRP plus 1/3 on that one. And I know I'm kind of dancing between Perry's and Jason's here. So why don't we do Jason's second one and go to KMI, which is Kinder Morgan. And that is a monster as well. And I don't think I'm going to have any issues here. In fact, it's looking even better now that I see that weekly chart. Yes, it's a little bit of a ways away from the light green zone. That might put you off, or it might cause you to do a little bit less. Instead of going a third, maybe go a sixth, but you have to appreciate the pedigree here. It's not far away from the light green zone because it's bad. It's far away from the light green zone because it's darn good. So we're going to go plus 1/3 on that one. And then let's flip back to Perry now. We'll do the relay here. CPay, which I did. We're going to go EAT, which is Brinker International. And a beautiful, perfect, wonderful chart there. Also, we're seeing the absolute cream of the crop here. And, normally I sort of say, we're in the US, we're getting some really great charts here compared to Australia. Not the case today, actually. I think we saw some really great charts from my shortlist today, admittedly, but some really great charts in Australia as well. Let's go FRP plus 1/3 there, and we're going to go to Jason's next one, which is calm. Stay calm and follow the trend here as well. And the most beautiful upside volatility. You can't get that candle unless everybody wants to own it and nobody wants to sell it. So plus 1/3 for me on that one. I know I am sounding like a broken record, but if I'm not, then something's wrong. Okay, that should be reassuring. The day that you tune in and Carl's saying all sorts of weird, different shit, that's the day that you need to be really concerned. Okay, but until then, if I keep saying the same thing, that's good news. Let's go to the, what did I do there? Let's go to the weekly chart. What did I did a little arrow, didn't I? I hit it. God. Weekly chart is fine. Williams Companies. And brilliant there as well. So we're going to go ditto on that one. FRP plus 1/3. And I'm going to click save. And that is it. Craig has got OXY, which is the Occidental Petroleum, one of the big energy companies there in the US. And this is obviously more of an aggressive setup. I can see what you're seeing. I don't mind it. I haven't really seen a dink sort of there, and there's ages before we see a dink there. But a decent price action volume volatility reversal. It can only be an aggressive setup, Craig, That's my opinion. But you do what you have to do. But my model would suggest adding no more than a sixth at this stage, as little as that, because at the end of the day, this is still a long-term downtrend. But hey, we did see the oil chart, and my view on oil, I think oil's going up. So, where do you find a good oil stock at the moment? Well, they're hard to find. That's not true. Where do you find a good oil chart at the moment? Well, they're hard to find because we know we've got charts like this. Look, on that topic, let's have a look at the big daddy of them all. Okay, Craig, wouldn't you rather go for this chart than the other chart? Surely. Not sure if you've thought that one through. This one looks good. Turnaround play, no complaints. Yeah, pretty straightforward here. White candle, high close, plus 1/3. What did I say on that day or that day? Look, you probably I think you probably end up with small loss there. No worse than that. Let's go plus 1/3 here. FRP plus 1/3. Is this the strongest setup we've seen in the US? No, I don't think it is. But in and of itself, it is a valid setup based upon my model. Okay, there's only a few left to go for you long-suffering sufferers out there. We're nearly there. FTAI, which I know we've done a few times before, so just to catch up here, what have we said on this one in the past? FRP plus 1/3, and that's all we need to do here. Click save, because it's an absolute ditto on that one. It's going swimmingly. Matthew, hopefully you're making good money on it. VST, I feel it's one that we did very recently as well, and as I can hope we can do over here again for you, Matthew. And this is the trick of it, and I know this is the hard part. I said it here, or maybe you bought it here, or whatever it is. That was the easy part, wasn't it, Matthew? The hard part now is looking at this and still adding risk, and hopefully you've added risk through here or here, and hanging on to it. That's the hard part. That's a challenge, isn't it? That's a challenge to you. Let's go to WGS. I know the other part of that equation, Matthew, is, well, Perry and Jason just showed you 6 other or 8 other great setups, right? So do you add on that other one that's going really well, or do you spread it to the other? That's the challenge. I don't think this is one you've shown us in the past, so I'm guessing this is a new one, and it's going to get the same treatment as the others, assuming there are no major impediments on the weekly chart. And look, there is one there, but it's miles away. It's up above 80. Oh, God, look at the history of this one. It was an $800 stock. Not that that should matter to us, but hey, I'm sure there are going to be people that will be thinking, get back up there. So that $80 is miles away as the next point of supply. And look, it's perfect textbook sort of stuff for me. So it's certainly FRP plus 1/3. And hopefully, Matthew, will come back. You'll give me this one in a week or two, and it's going just like the other ones. FUTU, which I thought somebody else had that one tonight. Maybe I'm imagining it again. Oh, maybe it's because you've given it to me in the recent past. And I'm going to go FRP plus 1/3. And it's up 50% from the last time you gave this to me. And I'm literally still saying FRP plus 1/3. How about that? And surely that is a little bit of a disconnect between me and everybody else you might listen to in the markets. Think about it. No value investor is going to tell you to keep adding to something that's gone up 50% in 4 trading sessions, are they? Could you imagine their little brains just heating up, just heating and heating, and it's getting hotter and hotter as their eyes roll back in their head and the steam starts to pour out of their ears in just this attempt to comprehend buying, continuing to add into a stock that's up 50% in 4 trading sessions. But we digress. Warren Buffett wouldn't do that. Let's go to... I think we're done. I think I'm done. Stick a fork in me. Let's head back to the PowerPoint presentation and say that everything we've discussed this evening is general in nature. It's not taking into account personal financial circumstances, objectives, or particular needs. So before acting upon this advice, consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading is risky. Stuff goes up, stuff goes down. It might not go the way you hoped it would. You could lose money. It's important you understand that could occur. It's always important to remember that it's you, not me, who's responsible for the stuff that you do with that money. Apart from that, ladies and gentlemen, it's been an absolute pleasure chatting with you this evening. I am so sorry for keeping you so late tonight, but hopefully it was worth your while. All the best for your trading and investing until we catch up again. Bye-bye for now.